Good morning and welcome to FT Markets. After China's Black Monday, many people have started to call today Turnaround Tuesday because following sharp fall in the price of oil and other commodities, we have seen a bounce this morning. While it's not been enough to retrace all of the gains, it is giving some people hope that this is more than just an exercise in knife catching. But joining us today to discuss the outlook for the market is Anjli Raval, the Financial Times oil and gas correspondent. What do you think the outlook for the oil is after the volatile couple of days we've just had?
Yesterday, Brent, the global benchmark, fell by 6%, and there was a similar fall in WTI, the US marker, as well. And there were concerns that, we've already surpassed the January low. How much further can it go? China, in particular, and Black Monday yesterday, really just signals sort of increased anxieties around Chinese growth and what this means for oil demand more broadly. China has been really the leader in terms of demand growth on the oil side for many years. And if there is an economic slowdown, what does this mean for Chinese demand growth, but also demand growth across other emerging markets too? So this is really what got people worried yesterday.
With the current worries about the Chinese economy, though, is oil demand still growing in that country right now?
It's still strong, but it's just never going to be as strong as it was, let's say, much over the last decade. So at a time when a lot of oil producers are producing huge amounts and there is massive glut in the market, in the second half of this year it's likely to be around 2 million barrels a day. Where is this demand going to come from? That's the big question.
And what about for other commodities right now? I mean, obviously we saw large falls in the price of copper and other metals that have come all the way down to the lowest level since the financial crisis in many cases. I mean, we were talking about this earlier, that China has been a major driver, not just in oil, but even more so for copper and iron ore and other commodities. For example, in iron ore, they import more than half of all iron ore produced in the world. Copper, again, by far the largest importer of the red metal, which is widely used in construction. As China's economy has evolved over the last decade, become much more industrialized, and as people have flocked to the cities, demand for those two key commodities has gone through the roof. As such, we've had massive investments in projects to bring more production online, but that's now happening just as China's economy appears to be slowing. As such, prices have come way off and have fallen in line with oil and other commodities. Had a slight bounce today, back up 2% or so, but it's still not clear whether going into the autumn months quite what we're going to see there. Which brings me to oil. I mean, what do you think the outlook is going to be coming into the autumn months for petroleum products?
The question is, what is going to support the oil price? US supply from US shale fields has been particularly resilient, as has supply from a lot of non-OPEC countries aside from the US. Also, OPEC countries, particularly Saudi Arabia and Iraq, have been ramping up their production. And let's not forget, we are about to go into refinery maintenance season in the next month or so. So this is when refineries will shut up shop, do their maintenance, and they'll be taking in less oil. So what is going to sop up that glut?
Thank you, Anjli. Well, it's clear that before the autumn months begin, after 2 days of intense volatility, it's perhaps not clear yet whether this is a market that's trying to find a new equilibrium or whether there still could be more falls to come. What we do know right now is that much of the fall has been priced in, and the old market adage has always been that the best time to buy is sometimes when others are fearful. However, that will require investors to be very brave at this point.